Bitcoin holders, this is very dangerous.
Wait, Lark, what the heck are you talking about? Bitcoin, it's over $100,000. It has been for the last 28 days, at least at the time recording it was.
And every time you check your newsfeed, there's another story about some publicly traded company. It's either bought Bitcoin or is planning to buy like $1 billion. It's not like they're buying like $5, they're buying like $1 billion at a time. So at these current prices and the ensuing corporate pile-on, it's all good, right, baby? Well, Bitcoin's going a hell of a lot higher. Heck, perhaps our new paradigm of money moment is really finally here. Maybe none of us are bullish enough. Maybe if prices hit $500,000, $1 million, it's just never going to come back down. Sounds pretty cool, right? Well, all this corporate buying is fantastic, and it's the leverage of the cycle. It's our toxic leverage of the cycle, and it's going to send the prices absolutely higher. You see, the problem with this theory is that corporate leverage could be problematic later on. You see, one of the two major cycle catalysts that is fueling the rise of Bitcoin is being fueled by leverage, loans, and debt. And as history always proves, this game of musical chairs can only go on for so long. So the Bitcoin ETFs, that's just straight money inflow, man. Corporate treasury buying, that's a different game. So in today's video, let's take some time to try to understand how these publicly traded companies, Strategy, 21, Nakamoto, Trump Media Group, are actually trying to acquire the Bitcoin, GameStop, and many, many others. We'll explore the tools that they're using, what's working, and what actually poses a risk to the market. And it's this later issue that we need to watch more closely moving forward, especially as we start getting near the end of the cycle, which I think is a long way away, to be fair. But bookmark this video for later, because this is going to be the toxic leverage unwind in the bear market. This is what will give us that 60, 70% drop. Because when this cycle's music finally stops, I want to be one of the guys left with the chair, and I want the same for you. Now, let's start by making sure we all know what this cycle's catalysts are. Two big things for Bitcoin this cycle: spot Bitcoin ETF flows and publicly traded companies buying Bitcoin. I think we can put a ... number 3 there for states and countries buying, but we haven't seen huge inflows from them yet. Anyway, now here's those inflows and purchase orders. According to BitcoinTreasuries.net, since 2020, the ETFs currently hold around 1.3 million Bitcoin. Public companies around 816,000 Bitcoin. Numbers vary a little bit, but anyway, you can see just how powerful these two catalysts have been for the cycle so far. Huge amounts of coins. Now, when we're talking about existential threats to the price of Bitcoin, there really isn't much problem with the ETFs. Yes, ETF sellers will sell at some point. Hedge funds will unwind their positions and all that kind of stuff. That's normal. Normal selling stuff. People or entities, brokerage accounts, buy and sell ETF shares. They'll do it with the market trend. It's fine. On the back end, BlackRock and other managers are buying and selling spot Bitcoin in accordance with the ETF transactions and getting their fees in the middle. It's fine. It's normal stuff. Nothing out of the ordinary here. There's really no debt or gimmick. It's just pure spot buying. However, when we turn to the public companies, the picture gets a hell of a lot murkier. There's a completely different game being played here. So understand that when we get news of a big public company that's just bought Bitcoin, where'd that money come from? You see, the actual methods by which they purchased that Bitcoin, one of two ways. Now, that's at the market share sales or issuing convertible bonds. At the market share sales, or the ATMs, ATMs, hilarious name for it. That happens when a company prints and then sells those newly printed shares into the market, which is dilution, of course, for existing stockholders. Now, to make this concrete, here's MicroStrategy's current outstanding shares count. It's 259.7 million shares. But if you go into the web archives for just over 3 years ago, back in August of 2022, you will find there were just, a few less shares. In fact, MicroStrategy's outstanding share count was 9.34 million. Holy crap, they've 27x'd. They've 27x the amount of shares. That's insane, man. So confirm, these companies are printing fresh shares and then selling them into the market, which results in massive dilution. Now, let's understand the good and the bad with these ATMs. But before we do that, guys, if you're trading these markets, you don't want to play this silly game with all these Bitcoin treasury companies. Man, you just want some pure, beautiful Bitcoin to trade, some Ethereum to trade. You know what? You like your dog coins. You trade your dog coins. Well, go do that over on BitUnix, the best damn exchange in the cryptocurrency business right now, one of the hottest exchanges. No KYC, no VPN, meaning anyone, anywhere can use BitUnix. Crazy trade bonuses. You have to $2,000 in trading bonuses. Crazy deposit bonuses. They're going to be up to $400 in deposit bonuses. You deposit $2,000 to get $400 back. You deposit $1,000 to get $200 back. Deposit $500 to get $100 back. And for the month of June, they're giving away $1,000 a day during each of my live streams. 2 people win $500 Monday, Tuesday, Wednesday, Thursday, Friday. All you have to do, sign up, and you're eligible to win. Okay? Link down below. Go check it out. Okay. Now the good and the bad with the share ATMs, okay? The good news is that they generally don't pose an existential risk to Bitcoin to larger cryptocurrency markets. These corporations aren't taking on any debt or leverage here, so it's really not that big of a problem for us. Obviously, it's not super fantastic for the company shareholders, but then like MicroStrategy, stocks have gone parabolic in spite of the huge amount of shares that come into the market. Obviously, it's worked out for everybody. But the shareholders are the ultimate bag holders, the financiers in this scheme. If the price goes up, everybody's happy. If the price doesn't, it's problematic. Now, when these companies initiate their ATM sales, it just dilutes the total share count, which shareholders have to eat. And again, if the price goes up adequately, nobody really complains. Now, the second method of purchasing Bitcoin is by issuing convertible bonds. Convertible bonds, oh yeah. No, convertible bonds, which simply are loans that investors issue out to a company, and the company agrees to pay interest on those loans, with the principal repayment due at maturity. So they're similar to US Treasuries, kind of, for example. The difference, however, is that investors have the option to convert their bonds into company stock at a future date at a predetermined share count and price. Interesting. So that can be very beneficial for them to take the diluted shares, not take a cash payment. So going back to strategy, for example, according to Grok, most of the convertible bonds being issued carry interest rates anywhere between 0 to 2.25%, with maturities coming due between 2028 and 2032. So that's the game. Investors buy these bonds, they get paid these interest rates, and then they have the option to get their principal back at maturity or to convert their bonds into stock. Meanwhile, the companies, they take the proceeds from those bond sales and, of course, plow them into Bitcoin. Now, obviously, given these super low interest rates on MicroStrategy, for example, a lot of these bond investors are going to do what? They're going to use those convertible bonds basically as a call option strategy for getting shares in the future. They get paid a low interest rate with good odds of getting their principal back. But if the stock price is a lot higher a few years from now, well, then they can convert the bonds into shares and make huge amounts of money. And that's really where they're going to make their big money, is if that bet plays out for them. So, okay, that's the entire scheme of all this corporate Bitcoin buying that we're seeing from a 50,000 foot perspective. It's a big flywheel effect, and the entire market is caught up in it right now, and it's not going to stop anytime soon. I think we're going to see dozens more companies by the end of the year, maybe more. A company buys a ton of Bitcoin, Bitcoin's price goes up, the stock price shoots up, more investors pile into the company's stock and bond products, sending the price up more, giving them more purchasing power to buy more Bitcoin. Bitcoin's price goes up again, the stock price goes up further. Round and round and round and round you go. Sounds great. Infinite money glitch. The problem with all this is when this flywheel unwinds. And the way that probably happens is with these convertible bonds, because it is, at the end of the day, debt. Now, I think there's a number of pretty different ways that this could all play out, but let's just give you a few dreamed up scenarios, hypotheticals, to make it concrete. We're not even talking about companies losing their Bitcoin through error, fraud, all this kind of stuff that's probably going to happen to some of these companies too, but we're just talking about very specific mechanics here. So it's 2028, okay? Billions of strategy convertible bonds have come to maturity. Many investors are expecting Bitcoin to be trading at $500,000, the MicroStrategy share price about $2,000. Instead, Bitcoin's at $200,000 and MicroStrategy's at $800. Disappointed, most of the bondholders demand cash repayment. Strategy is then forced to sell some of their Bitcoin to pay back the bondholders, because they've been all in, right? Any Bitcoin sales from MicroStrategy are going to cause a market panic. The flywheel will start to unwind. Bitcoin will tank even further from there. MicroStrategy shares will plunge even further, and the company will be fighting to stave off bankruptcy, theoretically. Not one to bet against Michael Saylor here, mind you, but we're just giving a hypothetical. Here's another one. It's 2029. Trump Media's $2.5 billion in convertible bonds hit maturity due to poor management of finances. DJT stock has underperformed compared to other Bitcoin treasury companies. Most of the bondholders want their money back. They don't want more stocks. The company unloads a pile of Bitcoin to pay off the debts. This sends Bitcoin's price plummeting, and a financial and liquidity crisis ripples through the other treasury companies. All it takes is one of the big ones to start going down. When the other guys start having their convertible bonds due and their share price is crap, guess what? They're going to get called on their debt too. The flywheel effect now goes into reverse, sending prices lower, and the shareholders of the other companies all looking for the exits all at the same time. Prices of the shareholder companies crater, and many of them will be forced either to go bankrupt, sell their Bitcoin, or both. So I think you get the idea. Now, unfortunately, there's literally hundreds of different scenarios that extend this flywheel money glitch that we're currently into a reverse. And to be clear, I want to say again, this is effing great on the way up. On the way down, watch out. The biggest risk, I think, are probably those convertible notes when they start coming into maturity. Now, this is a big topic, and we could definitely start digging into the weeds much farther on this by exploring, which companies are actually taking on the most risky debt, because not all debt's created the same. What MicroStrategy is doing is a different strategy compared to what some other companies might be doing. Is anybody going to be rehypothecating their Bitcoin? We haven't even got down that alley yet. They rehypothecate it, man. It's not even there anymore. What you think you have is not there. They've rehypothecated it. They're doing market making with it or some other bullshit. You can only imagine. One of these big companies does that. Not saying MicroStrategy, one of the other big companies does that. And again, it starts a panic ripple effect. There's a lot of different risk factors here. Anyway, for now, enjoy the ride. These corporate treasury companies issuing out all these bonds and dumping shares and stuff, they're going to send the price of Bitcoin up to $250,000. After that, watch out down below. Thanks for watching.